Okay, let's go. So, good afternoon, everyone, and welcome to this webinar. So, my name is Jean-Daniel Vermette. So, I'm very pleased to have you with us as we explore one of the most important yet often overlooked opportunities in global trade compliance, which is custom duty recovery. So, we're fortunate today to be joined by two exceptional experts from Descartes Group who will be leading our session. So we have Mr. Ted Rowe, Director of Business Development and International Solution, and we have Mudabbir Tariq, which is a Senior Solution Consultant. So together, Ted and Mudabbir will walk us through the evolving landscape of global trade, highlighting how changing duty structures, increasing compliance requirements, and supply chain disruption are creating both challenges and opportunities for organization. They also demonstrate how, through a combination of proprietary data, custom rulings, technology-driven analysis, and deep industry expertise, companies can uncover and recover significant duty overpayments while remaining fully compliant to the CBSA. So our goal today is really to give you a clear understanding of what duty recovery is, why it matters now more than ever, and how our structure analysis can lead to a substantial financial benefit. So before we begin, please note that we will have a Q&A session at the end of the presentation. So feel free to jot down any question you may have in the chat, and we can answer those also right at the end. So with that, thank you again for joining us. Ted, I'll pass it over to you to get us started.
Perfect. Thanks, JD. Welcome, everyone, and thank you again to Leighton for having us. They've been a great partner in working with them and their customers on, as he said, reviewing the duty exposure and looking for opportunities for recovery. It's been an interesting time over the last few months, as you can imagine. It's a challenging year in logistics and supply chain, particularly with trade compliance and really looking at the movement of goods across the border. To give you a bit of background and offer some insight on Descartes, we are a Canadian-based global company, primarily focused on, again, the movement of goods, but really automation and technology across the supply chain and logistics. Everything from transportation management to routing and telematics, customs broker forwarder technology, where Mudabbir and myself fall under is what's called the global trade intelligence pillar of the business. And again, really coming back to that movement of goods across the border and trade compliance. We work with all type of different industries across multiple companies in reviewing their duty optimization strategies, looking at their exposure, which again, over the last year has become even more of a focus for companies on how do they mitigate that duty and look at opportunities to save money and lower their import costs. What I wanted to do is bring you through a slideshow here, just in relation to duty recovery, give you a bit of insight on what we do. Excuse me. This slide here in regards to, I call the supply chain conundrum, it's really the several challenges in navigating your supply chain. Everything from multiple business units to acquisition of different companies. Are they aligned across each company or business unit? Being your procurement, your duty exposure, your classification. Obviously, duty changing in duty over the last while has been a top priority. Complex trade documentation. Everything is getting more complex. Manual, time-intensive compliance processes. One thing we've seen, and probably a lot have seen between the US and Canada, is these layering of tariffs and how they are more complex, how to figure out how products are crossing the border. Disrupted trade flow, excuse me. With everything from strikes to natural disasters, evolving customs requirements. As many of you may be familiar with CARM in Canada, or the release of CARM in the last year, which is added another complex aspect of imports into Canada, which again, even though it's released a year ago, there's still a number of growing pains within CARM and how it is being rolled out to importers in Canada, and they're fixing the bugs on that. Restricted parties. Who are we importing to or exporting to? A big focus on that over the last number of years too, with everything going on in the world with sanctions, forced labor, etc. These add another complexity to it. And compliance teams, how are they situated in each jurisdiction? You can also throw some curveballs into that that can increase the complexity. I have up here Brexit, knowing we're a few years removed from that, but there's a perfect example of more the geopolitical side of things that can be added to make the supply chain more complex. AI and machine learning, a lot of buzz on that, both on how do we employ that within our own companies, within trade compliance or our logistics and supply chain, or how do we protect ourselves from that as well. Global trade instability, trade wars, pandemics, all of which we've seen recently, is adding many challenges to the supply chain. How do we bring products into Canada? How do we export products? How are markets being tougher to enter or to buy from? Also, on more of a positive note too, but still adds the complexity to it, is just the progress of new trade agreements that can simplify procedures. These are still changes that have to be dealt with, though, in your supply chain. Complexities of what's that happens if we're not looking at these complexities? How does it affect our business? I want to just touch on that. Obviously, disproportionate supply chain disruptions, penalties. So if you're at risk for non-compliance, increased audits, are you covered in that capacity? Can lead to, again, trade penalties, AMPS penalties, customer dissatisfaction, brand reputation, self-explanatory, missed market opportunities. Are you getting your product to market most efficiently, most inexpensive, utilizing aspects of duty recovery, for example, to lower your import costs, which brings us to the duty overpayments too. If we're not managing those, managing our supply chain, looking at the duty that we are paying, are we using the best practices and utilizing the best information that's out there to ensure we're paying the most optimal duty rates? So here's what we have to talk about with what is duty recovery, especially in Canada. And in essence, as it says here, duty recovery is a process of uncovering and recovering customs duties overpayments. Though we have what's called the global harmonized tariff codes, as I put in quotes, the reality is Canada is a little different from other jurisdictions. You have that benefit or ability of interpretation in the tariff code. When I say that, where that differs from other jurisdictions, such as the United States or other countries, where all the information is published, products are named in the tariff code specifically. There's not a lot of wiggle room, if you will. In Canada, you have the benefit of interpretation, but you also have the benefit of privacy laws in Canada, which mandate that customs rulings can remain private and unpublished in the public domain. So the reality is importers can have a proprietary customs ruling that affects just their products for them as the importer. In saying that, what companies do is leverage companies such as Descartes to look at their imports as an independent third party outside of your internal group or your customs broker to say, do you have a different way to classify these products at a lower duty rate, or even no duty for that matter, yet still be 100% compliant with the CBSA? If you can make that claim, grounded in trade compliance, grounded in rationale, logic, obviously, the government will issue a 4-year refund of the duty that you have paid on those particular products. One of the big benefits as well is, yes, you get the refund. It's found money. It's a 4-year refund of duty previously paid, but you're also able to leverage that information moving forward to make those changes internally to your compliance program or your imports, to use that new classification to bring your product in at that reduced duty or eliminated duty. That is not made public. One of the big benefits there is you can gain a competitive advantage as well. The reality is, in Canada, you as an importer, leveraging that private information or that ruling, can be bringing in a product duty-free, whereas your competitor down the road may be bringing in that exact same product from the same country of origin, sometimes even from the same vendor, yet they're still paying that duty rate, as they're not using that information or privy to that information at the time. That can create, obviously, a lower landed cost for you in bringing in your products to market. And again, it comes back to that, who gets their products to market efficiently and for the least cost possible. One of the, and I'll bring you to a slide that really goes through the different areas that we look at, but what we find here is leading cause of overpayments is the classification. That's where we find the most opportunity in working with an importer. In saying that, probably one of the biggest, the most prevalent, I would say, concerns we have is that we're looking for mistakes. And when I say classification, when we review the classifications of the importers that we're working with, I would say 98% of the time, the product is indeed classified correctly. It's compliant. It is assigned either internally or by your customs broker or by your vendor. Again, correct. But we have a different way of looking at it, bringing new information or a different interpretation of the tariff code approved by the CBSA to you as the importer, for you as the importer to use. As such, it's really not about finding mistakes as much as is looking for opportunities to reclassify your product at a more beneficial rate. And again, grounded in compliance. We interpret the tariff code to ensure they're classified to your best financial benefit. However, coming back to compliance, we also look at all your products and the classification through a lens of trade compliance to look, is there risk to the importer that we can point out and help you work through, again, at no additional cost. It's really just an added value to us reviewing. So ensuring you're paying the most optimal duty rates while confirming trade compliance. Again, 4 years versus other jurisdictions, which are much less, you're able to look at, receive a 4-year refund. And again, equally successful in other areas of duty mitigation too. And some are listed here: duty drawback, product origin. So we're assessing all your imports, looking at trade agreements that may be applicable based on the origin of the goods, sometimes the way the good is used. We can help each importer and work with them too in qualifying any products that may benefit from a free trade agreement that's out there, and ensure that you have the proper information and ensure that you're using that trade agreement to the best, for its full potential. I will touch on drawback very carefully, especially US-based groups, where they don't have the ability of interpretation. Again, when you talk duty recovery from a US perspective, you often hear duty drawback. And duty drawback is much more of a US process, just based on the volume of product that goes into the US and that is redistributed outside of the US. And the essence of drawback is product would come into the Commerce of Canada, pay duty on that product, only to be subsequently re-exported either in same condition or manufactured remanufactured into a new product or a new form, and then re-exported. That is also an aspect that we review with each of our clients. Obviously, we look at the tariff classification first. If you're able to eliminate the duty on the initial import, there's no need to do the drawback. But these are all duty mitigation strategies that we review and when conducting a duty recovery analysis. this is just a visual of where we find the most opportunity, and we touched on most of it. Right here is 76%, and this is the most recent review that we did, is based on tariff classification, finding those alternate classifications that we are able to use to gain agreement from the CBSA, get approval either by previous precedent or ideas, or actually getting applying for and receiving an actual customs ruling or a binding customs ruling on the importer's behalf. Other areas we look at, obviously, is origin, as I mentioned, finding free trade agreements that either are not being utilized or, again, are often being utilized, but there's within some of the nuances of these agreements, are they being used to their full potential? We find those opportunities and make sure that you're leveraging those to lower your duty, either from the initial imports or from a refund standpoint. And then we look at, again, drawback opportunities, some valuation, and some remission. Why use a company like ours? And one, we are an expert in tariff classification and trade compliance. Being grounded in technology, for one, in Descartes in particular, we're able to go through the data in a much deeper, expeditious form, generate refunds faster, get down into the very small minutia or line level detail of product SKUs, and especially for those companies who have thousands, if not hundreds of thousands of SKUs and widgets that go down to even the 5-cent level, we're able to look through that. But what we do is we can maximize your refunds, for one, in looking at it thoroughly, using our technology to review the data, using our proprietary customs rulings to bounce them up against your import data, your classifications that you're using, and finding those opportunities. We protect your time limits. One thing that we ensure from a methodology standpoint, in that only having that 4-year mandated timeline from the CBSA, is we review all your oldest transactions first. We review look at probably your biggest risk of expiration. So looking at your oldest transactions, ensuring that any refunds that are available, we're capturing those, protecting those, so they don't fall outside the timeline, which if they do fall out the timeline, there is no recourse for getting those refunds any longer. Risk-free, no-cost solution. We work on a 100% contingency basis. So we talk to our customers, we get the information that we need, we do all the work behind the scenes. There is no cost until we secure you a duty refund. If there is no refund that is secured, there is no payment, no invoice received for that work. That's the risk that we take as the consultant in reviewing, presenting to the CBSA, gaining a ruling or applying for a ruling, even going to the Canadian International Trade Tribunal, where we also do our own litigation. There is still no risk or no cost to that aspect of the business whatsoever. Gateway to high value benefits. Again, improving trade compliance. Having a partner in trade compliance. We tell all of our customers that you really become an extension, or we become an extension of your trade compliance team. Understanding you have internal experts, you have customs brokers, it gives you another level of expertise or opinion to come to for information, new trade agreements, new product lines, new countries of origin that you may be purchasing from, as well as some of the political turmoil. How do we navigate that from a trade compliance and a supply chain standpoint? As I mentioned, with it being a purely contingency-based process, there's no client cost at all to go over. Again, that's probably the biggest concern and question most have, is what is the cost? There's no project cost. There's no additional fees, retainers, expenses of any type, hence the no risk. Again, you'll never see an invoice issued unless a refund has already been received by you from the CBSA. So you will have that any refund will be issued to your CARM client portal and your ARL account within that. So you will see that show up before any invoice comes, with the information as well that we'll provide to ensure you're making those changes moving forward, so you can recognize those savings on the reduced imports costs. As such, there's no need for a budget to work up a budget for this. Often we are working with companies and trade compliance teams who have, again, very, very small budgets, and they're looking for money actually and for other initiatives from a trade compliance standpoint, whether that be software or headcount, whatever that might be. This gives them an opportunity to generate found revenue, if you will, generated through or driven by the trade compliance team often, or the finance group, which transfers again into revenue, but also ongoing cost savings. The way we look at things is different with each company. It's not a one size fits all approach. We deal with companies from retail to oil, mining and gas, to chemicals, food and ingredients, automotive, you name it. So every industry has its own approach and opportunities, but also each client of ours and the way they import is what we want to understand. So as such, our first step is looking at your processes, analyzing, as I say, the landscape of how you're doing business, how are you importing, classifications you're using. Again, do we have precedents of any sort or customs rulings that may affect those particular products that you're importing? And then what we want to do is determine what's the best way to approach it, and how do we determine the most effective practice in, whether that be trade agreements. Again, tariff classification, we're always going to look at, are you re-exporting product from a drawback standpoint? So we want to look at, analyze the way you're doing business, determine the best approach to review the duty recovery, and then look at that as what's the best way to maximize those refunds based on the information that we have. So again, it's not a cookie cutter approach. It's very much consultative in nature, meeting with you, understanding the process, making sure you understand the process, but understanding your business as well and how the two align. I will say on that note too, aside from what's the cost, one of the biggest questions we get asked outside of that is, what is the time and resources involved in this, from what's the lift on your teams? The answer, quite frankly, is very little. We really split it up into a process where we review the firm report and any duty outlay that you have. We then really just need some information and some direction to your import documents, which are all available electronically through your customs broker. We don't involve your customs broker, but we work with you in the best, most efficient way for us to retrieve your import documents. So your B3 prior to CARM, your commercial invoice, bill of lading, etc. that's included in your import documents. And then we do all of our review in the background with that information. We'll handle all the resources involved, come back to you with a report on what we see, what opportunities that we've identified, ensure that you're in agreement with those opportunities and the way we're representing those products. Again, I come back to compliance, but we want to make sure that we're accurate in the way we're representing the product correctly, and coming with a logical argument to go to CBSA to get that the ruling or the duty relief on your behalf. Duty recovery benefits. There's a lot. Obviously, the cost recovery, it's found money. It is, you can go direct to your bottom line. It's money that's already been spent that you're able to retrieve. Again, it leads into ongoing savings. So we work with you outside of just getting the refund to make sure that you have the information, the tools to make those changes internally, both with your customs broker, your internal compliance program, make the HS code changes. You will have all the information and approvals from the CBSA in your files if ever questioned, to substantiate the refund you received and the new classification. Cash infusion, as we mentioned, to reinvest in other areas of the business, especially when it comes to, again, compliance programs. All the more important in this day and age, this can generate funds to put into that area of the business. You have us, again, as Council on Trade and Customs issues, an extension of your trade compliance team to use, to lean on, again, help you navigate the uncertain tariff landscape that's going on currently. You have access to proprietary customs rulings. As I mentioned, you're often going to receive a competitive advantage over others that aren't utilizing this information or do not have these customs rulings at their disposal. You gain from a customs level too, is in working with a company like ours. The CBSA sees as you're doing your due diligence. You're not cowboys trying to fire stuff against the wall and hope it sticks. It's really coming to them and saying, I believe this product, as we've classified previously, can be accounted for in this new way with the rationale behind it. You get agreement from the CBSA. You create that relationship as well. So it gives you that benefit. I just want to go over quickly some successes that we've had to give you a better idea of how some of this works. The one currently here is with an automotive company, Canadian-based, importing automotive components, parts. Some were being re-exported in the same condition. Some were being actually manufactured and put into other parts. How we were able to help them, we talked about drawback briefly before, is we created a drawback program for them. They were as heavy duty on the imports. We were able to set up a program, get them on a proper cadence as well on what made sense to track those imports, the duty paid on those imports, and then track the subsequent export out so we could align those two transactions and generate a drawback for this particular company. This recovered in excess of $5 million, but it's also become a repeatable process for them that they're able to utilize now moving forward. An example of working in the medical industry, and particularly in the PPE, which has been all the rage over the last few years. As you may know, it was 18% duty on most PPE. We worked with customs extensively and a couple large medical device companies and suppliers on reassessing that duty rate to a 0%. It generated over a $40 million refund in this case, probably more up till now. But again, the big benefit here was these importers were now able to bring these products in at a 0 duty rate as opposed to 18% prior. A chemical. This was an example. We worked with a big chemical company, large multinational with significant Canadian presence. We're paying 5% on a significant portion of their imports. We worked with them in two angles, if you will. One, primarily on the tariff classification. We were able to reclassify the product to generate a refund, but in reclassifying that product, we were also able to shift that to a tariff classification that benefited from a particular trade agreement. So again, it was a refund generating project, but also rendered it duty-free moving forward as they were able to take advantage of the trade agreement that applied to that particular HS code. I know we're getting close here. Just to give you a quick idea of the process we touched on earlier, the initial step is obtaining the information, so high-level information in regards to your imports, particularly what's called a firm report, which is also, since the advent of CARM, is a CAD report that captures for the balance of October 2024 to current. Both those reports will outline any duty that your company is paid as an importer, as well as the HS classifications that were used upon import. Some of the other information it will share is the product description, the port of entry, customs broker, country of origin as well, but then again, all your duty and GST. So we get a picture of what is the duty that has been paid over the last 4-year period. With that, we, as I mentioned, bounce that up, for lack of a better expression, against our proprietary customs rulings, and where do we have opportunity based on the HS codes you're using. It's also goes through 3 different auditors or for review that look at, these are classification experts who all have experience with multiple different product lines, to see if anyone has different ideas, interpretations that they may bring to the table. We come back to you with those findings. Again, we get approval from you. I should say, prior to that, we do need those customs, your entry documents. So we work with you on that. And again, that is the probably one area where we need some direction on. Again, we'll handle all the resources. You just need to point us all in the right direction. With that, we do that review, come back to you, give you the findings that we have. You can attach a dollar value to the opportunity at that point, or a likely dollar value at that point. We then proceed with filing those refunds or those adjustments through your CARM portal, so you'd have full visibility to that. And we review all the overpayments that we find, submit them through CARM, and follow those through until they are refunded to you as the importer. In the case, as you'll see down here, sometimes there is areas where there is an appeal that is required, or a tribunal. But again, that is something we bring to your attention at the time. There's still no cost to that. It's still 100% contingency based. Supply you all the details upon approval of a refund, and we work with you to make the changes moving forward. And again, be available to you on an ongoing basis for any of your compliance questions. With that, we can turn it over to some questions.
Thank you, Ted, for the presentation. So we've covered a lot of definitely important points for the duty recovery in Canada. So everybody, we're going to open the floor for a Q&A session now. So I'll also guide the discussion with some common question that we hear a lot from companies when we meet some prospecting clients. But we'll also take some questions from you, as you may have. We do have a question already, Ted, for you from Andrew. Do you work with freight forwarding companies to do duty recovery?
Yeah, great question. We do have occasions where freight forwarding companies do have a customer who is importing, paying duty, that we might have a relationship with that forwarding company, who has us work with their customers in reviewing their duty. So that does happen. And I see also in regards to the US Customs, yes, Andrew, we do. It's I would say it's a different animal. It's more complex in the US. There is that drawback opportunity, a lot more volume coming into the United States and being re-exported. With all products being named in the tariff code in the United States and public information, even rulings are made public to all importers. It's a more complex process to file or obtain a binding ruling. But the short answer is yes, we do it. It's just a different approach. And even down there, it's considered a protest as opposed to a recovery. The one thing that we do always suggest and recommend is, and I'll preface that by saying 80% of the companies, 75, 80% of the companies we work with in Canada are many times subsidiaries of US companies, and some are being even run, their trade compliance groups are in the United States, and some want to just simply review the United States just by nature of the size. We still always recommend reviewing the Canadian side first. The reason for that, call it a test market, if you will. It's, you have that ability of interpretation, you have that ability to obtain proprietary customs rulings. And though we never go down to the US and say, hey, Customs and Border Protection, you should do this because they did it in Canada, it opens a conversation and it creates a precedence that you can sometimes bring down to the United States and apply for a binding ruling on that. So it definitely is something that we do.
Awesome. And we talk a lot about definitely applying for recovery, submitting to the CBSA. The question we get a lot, obviously, when we do that is from a compliance standpoint. Does participating in the duty recovery program will put a company at risk or increase scrutiny from the CBSA authorities?
Yeah, and that's a question we get asked, obviously. Does it put a target on our back?
Yeah.
Essentially. Again, short answer is no. And when I say that, in working with us, I come back to the trade compliance angle. One thing we do where there's some, as I say, mom and pop shops, or where they'll file, get a refund without full approval, say, from the CBSA. All of our refunds our adjustments are presented to the CBSA, approved by the CBSA prior to any refund being issued to the importer. So you've presented your case, if you will, your logic, and that has been approved by the CBSA. In return, you receive a detailed adjustment statement or a confirmation from the CBSA that confirms this has been approved. So you have that for your records. The reality of, in working, as I alluded to earlier too, in working with a company like ourselves and other compliance companies that are out there, is the CBSA sees it as you're doing your due diligence. You're looking for direction. And that's what they want to see. In regards to looking at risk and trade compliance risk, I think one of the benefits we offer too in reviewing a company's imports, and again, we're primarily focused on those imports that are attracting duty, but if we see any compliance gaps that might put a company at risk, even if there's a zero difference in duty, we'll bring that to your attention as well. We talk about that prior and how we present that to you, but we can bring that to your attention, help you make any changes that may need to be done on a moving forward basis. And again, you're doing your due diligence to make those corrections. Again, that's just an added value in what we do.
And just to add on to what Ted said, in Canada, under the Customs Act, there is no obligation for the importer to correct the tariff classification if the end result is a refund. So most of the work that we're doing results in a refund for the importer. And under the Act, there is no obligation for the importer to file it and correct it with the CBSA. So it's different from the US, where in any circumstance you need to correct the HS. But in Canada, there's no obligation to correct if the end result is going to be a refund under Section 74. So from a compliance perspective, if there's a refund at issue, then there's no obligation to submit that refund. So there's no risk associated with submitting a refund application. And the worst case that can happen, as Ted mentioned before, is they could come back with a decision, but it won't result in any penalties if you submit a refund.
Yeah, great point, MT. Yeah.
Thank you, MT. So Ted and MT, so now we're talking about submitting the application. We're ready to file for the refund. So how long does it take? So how long does it take before you actually receive the funding or recover the overpaid duties?
Yeah, from a process standpoint, once MT and his team have the information that they need, so the firm report, the import documents, which is a pretty quick transition. And again, we walk you through that, and we'll do all the lift as far as getting that documentation. We just need that direction. It would take 3 to 4 weeks, depending again on the complexity of the review, the number of product SKUs, etc., to review the data, come back to you to say, again, here's our findings, here's the next steps. Are you okay with us proceeding with filing these refunds? Then it becomes a bit of a waiting game with the CBSA. And I say that the CBSA's standard, again in quotes, standard service time is 90 days. And they're getting back to that standard fairly regularly. And when I say that, that's to issue a decision or an approval. It could be also a rejection. Again, if it's fairly black and white, if it's not too complex, it could come in 30, 45 days, but it could be 60 or it could be 90 or could be longer, depending on the issue and the complexity of it. But it's something that we monitor for you throughout the process. You'll also have visibility within your CARM portal if you're utilizing that to see the status of any rulings that might be applied for or adjustments. Mudabbir, did you have anything to add to that?
Yeah, so with the advent of CARM, the refund process is now all electronic, so it's no longer paper-based, right? So in some instances, it could come back quicker than anticipated, which is 3 months, right? So I just wanted to let our participants aware that with the advent of CARM, things are getting quicker than before, I would say, in certain cases, not all.
As they work out the bugs, yeah.
Yeah.
All right, so the two last questions that I have for you guys will be mostly about the US. So obviously there's a lot of things happening with the US at the moment. So the first one will be, is there a way for companies to recover the steel and aluminum tariffs that are currently in place in Canada? And that's part A. And part B of my question will be, can they also recover any of the new surtaxes that have been implemented in the last few months?
Yep. So part A, in terms of the U.S. surtax that is applicable in Canada on the steel, aluminum, and so that's a Chinese tax, right? And the U.S. surtax that was applicable in certain goods up until September there are strategies that we can look into to recover that as well. However, it's only the strategies would only apply to certain importers, and so we would. So that's determined on a case-by-case basis. And when it comes to the steel or aluminum surtax, which is now 50%, there are also strategies there that we can look into and see if the importer qualifies under certain circumstances as outlined by the Department of Finance. And if they do, then we can apply for a remission and explore that part of the strategy as well. So the U.S. surtax order was in force up until September of this year, right? However, the duties were in place between March and September. So there's a 2-year window to claim the duties as they relate to the surtax, right? But the regular customs duties, there's a 4-year window. But if you want to claim back the surtax duties by way of any remission orders, then there's a 2-year window for that. So there are, again, to just answer your question, for part A and B, yes, there are strategies that we could employ, but it depends on the importer and the industry, and we can look at it on a case-by-case basis to identify if there is a strategy already put in place by the Department of Finance or CBSA, or is there one that we need to create that is customized for that importer?
Okay. Well, that's it for me. I think we're all done also with question. So Ted, Mudabbir, wanted to thank you. I want to thank you, everybody, also for joining us today. Well, I hope you found the insight on duty recovery helpful. Hopefully that will give you some ideas on how to optimize your processes. And if you have any question, please do not hesitate to book a meeting with us, just so we can discuss, see if we can bring any added value. We're definitely more than happy to help and learn more about your situation. I want to wish everyone a great day and a lot of success in your project. Ted, Mudabbir, thank you so much again. Appreciate your time.
Thank you for having us.
Thank you,
you for your
everyone.
time.
Appreciate it.
Bye.
Take care. Bye-bye.
Bye-bye.